Okay, how's everybody doing today? I hope you're doing well. So today we'll talk about gold, as you know. I hope you're all ready, all set. Yeah, I'll begin with a quick introduction about myself. Let me have some small technical thing here. Yeah. My name is Yochai Lam. I've been a retail trader and a computer programmer in the past. I founded Forex Crunch back in 2008, and then with FX Street since 2018. My focus is on fundamental analysis. That's what I'll do here today, talking about one specific topic, that's gold, and I'm leading FX Street's premium product offering, participating in Ask Our Analysts. So yeah, all that shines is gold. If you're just talking to one of our super users, and one of the reasons they like gold is because the volatility there is just right. So not too boring like some people find currencies, nor too crazy like people find stocks or of course cryptocurrencies. But before I begin, I want to talk about our premium service, where you can tap into 20 years of our Forex trading experience. We cover gold, of course, but also Forex, stocks, crypto, commodities, other stuff. We provide instant traded notifications and alerts. And perhaps one of the best features is that you can tap into our knowledge just all the time via our exclusive traders community. There's room to talk among yourselves and of course with other people as well, other like-minded people. We have a really nice atmosphere. You can learn a lot from each other and from ourselves. So yeah, these are trading day alerts, signals, and people really like us. This is what people are saying on Trustpilot, which is well trusted, as you know. You're welcome to sign up. I just shared the link on the chat, so you're welcome there to sign up. Best retail news service available. Really positive stuff. Again, these are advantages. Lots of experience you can tap into, follow our trade plans, get signals, get premium analysis, very actionable content. So yeah, not only fun, but very useful. Okay, let's talk about gold. That's what we're here for, right? So gold is considered a safe haven. We'll talk about that, talk about why it isn't necessarily a safe haven, talk about yields. That's already more interesting thing. A bit about geopolitics, about Russia, about China. We'll talk about gold and silver, the relationship between that. And if you want the most actionable part, is the best times to trade gold. Okay, and we'll of course have time for questions and answers, and of course we'll tackle a bit what's going on in the markets today, because I don't want it to be only theory. I want it to be also actionable, also a bit of practice. Okay, so yeah, let's kick it off. So gold is considered a safe haven. Why is that? So it's seen as an ancient, well, it is an ancient form of money. I'm here in Barcelona, Spain. The Spanish Empire raided a lot of gold in South America, and that was a critical currency. But it didn't begin 500 years ago. It began a long time before. So if that works for so many years, why shouldn't it work? Why shouldn't it be safe? But if we jump to the 20th century, it used to be tied to currencies, the gold standard. It also caused some issues, caused countries to get stuck in a deflationary trap. We won't dive into history, but some people see it as the way to provide stability as a safe haven. The theory also goes that it has limited capacity. It cannot be printed. In the Middle Ages, some people tried, the alchemists, to produce gold. No success over there. And even 21st century modern technologies have not made gold printable. It has limited amount, can be found in mines in several places. So some people see it as a hedge against inflation. If there's limited amount, gold can rise when there's fear of inflation. It's not exactly that way. I see it as faith related, if you want, as related to, if people believe that gold will rise, it will rise. I mean, people buy it. It's like self-fulfilling things in the economy. People are confident and they buy stuff. the economy grows and everybody gains. And if they feel depressed, they don't buy stuff even, and they cause an economic depression. But in any case, we're traders right here, aren't we? So we want to make the trend your friend. So it's important to know that gold is considered a safe haven. I don't see it as such, as we've seen in many cases, phenomena of gold falling when inflation was rising, and the other way around. So it doesn't always correlate that well. I see it correlating much better with yields. Yields are returns on safe bonds. So if we take gold as a perceived safe haven, it has to compete with another asset that is a safe haven. This asset is U.S. Treasuries. The U.S. economy is number one in the world. 10-year bonds are the global benchmark against which everything is compared. So, well, we all recently averted the debt ceiling crisis in the US, so US debt is safe, or the safest once again. So, in general, the higher yields go, the lower gold goes. Why? Because if you can park your money in something that is considered safe for a long time, 10 years is a long time, and you can get a fixed return every year, and it's a liquid asset which you can sell all the time, why would you bother buying gold? But when yields fall, when the returns on holding US debt, when they fall, then perhaps there's room to buy gold. Gold becomes more attractive, and that's when it rises in prices. Okay, the best moves in gold are when yields move and when they move strongly. So when we have only a gradual move in yields, when they rise from 10-year yields from 361% to 362%, gold will probably not feel it that much. But if it rises from 3.61 to 370 in a short span of time, then gold will suffer quite a lot. If it falls from 361 to 355, then you'll in a few minutes, then you'll see gold jumping a lot. Okay, so the best correlations are when the moves are faster, sharper. Okay, and another thing you can do when you look at trading gold is if you're especially outside the market and everything is calm, then you can see that when gold and yields rise together, that means gold is strong. Why? Because yields are up, it competes with gold. Gold is supposed to fall, and it doesn't fall. That means there is strong demand for gold. It means that lots of people are buying gold, again, because it seems like a hedge, because the central bank is buying gold, because it doesn't matter. You need to follow what matters is results, results, results. And if you see gold rising, when yields are rising, that's a sign of strength. Next time that yields will fall, gold will jump even higher. And this logic works the other way around. If you see yields falling, we have a weak data point in the United States. Yields are falling, a lower chance of rate hike. Then yields are falling, and gold still remains weak. It doesn't take advantage. If an asset cannot take advantage of good news, it means it's weak. It means the next time yields will rise just a bit, just a small thing, gold will fall because gold now is perceived as weak. So that's something I'm taking from another another webinar I gave about identifying currency strength and weakness. This is where this applies to gold. Okay. Let's move on. Let's talk about Russia, Russia's gold, a bit about China as well, because we're talking about countries who have a growing rift with the West, with U.S. debt, and what their central banks do has an impact on the war and on the price of gold. Sorry, I already saw the slide about Russia and saying war, and I jumped to saying war. So. Take you back to 2012. 2012, we had gold prices at very low levels. We had lots of rush to gold because of enthusiasm about the US debt ceiling and all that. 2011, it reached a peak of 1,900 and just a bit, 1,911. and then prices collapsed. So the Russian central bank did just regular speculation. It looked cheap. It bought gold, but it was quite useful because in 2014 we had Russia invading Crimea and also parts of eastern Ukraine, and Russia began suffering sanctions from the West. So they began accelerating their accumulation of gold. They wanted to have more fortress economy. That is one of the reasons gold extended its recovery in the past decade. The idea was to shield, the idea of the Russian central bank was to shield Russia against sanctions from the West. Then came the war. Well, COVID came, and then pushed prices even higher. There was lots of money sloshing around the markets. Everything was rising in 2020, 2021. Then when the war began around, February 24th last year, and Russia invaded Ukraine, they had something like $67 billion worth of gold held by the Russian central bank. Not all of it was held in Russia, and some of that was frozen. The same goes for currencies. But Russia, what I want to say is Russia has a significant influence because they accumulated a large amount of gold. So as some of the assets were seized, some of the gold, some of the currencies abroad, they could try to sell some of the gold, and that could create downside pressures on the currency. I see it only as a minor factor. I see that becoming a more major factor if oil prices fall a lot more, because Russia still remains dependent on oil. Now, they hardly sell any oil to Europe. They sell it to India and China. And Europe is buying more oil from other places, from the Middle East, more than before, from the United States. Anyway, but as long as oil prices are not so low, $70 is not so low per WTI, then they don't need to sell gold. They're not in trouble. But it's a factor that should be taken into account. I think if oil collapses, then Russia could sell a bit of its gold. Now, Russia, I want to add a bit more. They would like to diversify away from Western systems, from SWIFT, from the US dollar, and they would like to trade more with the yuan. The yuan is problematic because of their capital controls. It would like to trade more with India, but India, well, wants to trade with Russia and China, but also with the US. So it's not that not such a big factor. Okay, I'll mention. Yeah, let's talk about. Yeah, another thing to mention. I don't think I have a slide for that. Is another small factor. If I mentioned already India, then there are some dates in the Indian calendar which are considered good dates to have weddings in because of religious reasons. And in India, it's quite common to give gold as a gift to the new couple. In the past, we've seen some impact close to these dates, and you can look at it. You can look, just Google India wedding dates, and sometimes we can see these small factors favoring gold before these dates, but after them we see it falling. These are very, very minor figures, minor impact. Well, I'll mention that later on as well. Let's talk about gold and other commodities. So gold and silver tend to trade in tandem. So usually when gold rises, silver rises as well. But when the gold-silver ratio reaches extreme highs, my experience from the past is that it's a good time to buy silver. So if you want to use gold as a tool to trade another precious metal, silver, then look at the gold-silver ratio, and when it reaches a peak, that's probably a good time to buy silver. Again, use other methods as well. This is not direct trading advice, but it's something to take into account. Okay, so that's another mention. Oil. So gold and oil are only correlated around geopolitics. Usually, you can see non-farm payrolls, U.S. inflation, Fed decisions having a massive impact on gold because type of events have a massive impact on yields. But oil doesn't always move when yields move with gold. Oil moves more when there's supply and demand issues, like when Saudi Arabia announced this weekend that they're going to cut production by 1 million barrels per day. Then oil jumped, and nothing else in the markets moved. And when the U.S. releases oil from its strategic petroleum reserves, then oil falls. That's the supply. And when demand rises, when there's good growth figures from China, for example, the price of oil rises. But it's not always that correlated, okay? But geopolitics is where it matters more. As I mentioned earlier, when oil and if Russia's income from oil falls a lot, they could sell gold, and that's when you can see correlation between gold and oil. Okay, where there is a good correlation, it's something much more obvious. We're talking about companies that mine gold. If they extract gold from the ground, okay, then they make more money when the price is higher. Very simple logic. And the other way around moves as well. It happens as well. I would say that if you're looking at mining companies, usually they don't mine only gold, they mine other stuff. And the hot commodities now are more related to green technologies. So that includes silver. There's use of silver, cobalt, palladium. I'm sure there are many more. And the fun fact is that in electric vehicles, the amount of copper that is used is 4 times higher than in a standard combustible engine vehicle. So demand for copper is also rising because of the shift to green technologies. So that's a bit, I went on a tangent, but in general, gold mining stocks are correlated with the price of gold, but usually the same companies also mine other stuff. Okay, and let's talk about timing. So I already threw something in the air about timing, about Indian weddings. And so, yeah, again, just look out for buy the rumor, sell the fact. If you have a specific date that you found on Google, we might see the price rising before that date and falling afterwards. Again, it's a minor factor, but that could provide the explanation or provide another reason to buy or another reason to sell if it goes with other trends. Another factor to take into account. There aren't that many wedding dates a year, so it's not that common. Another seasonal thing is the autumn. So why does gold fall in the autumn? Because September is a bad month also for oil, also for stocks, also for everything. September, October, and then around November things turn around. In December there's usually the center rally. So these are just seasonal patterns. They don't happen every single year. I mean, if let's say we have a rate cut this year from the Fed or hints of a rate cut, then we'll see everything rising in September, October. But in general, these are seasonal patterns, something to take into account. And when we're talking about the days or a week, so we're talking on a Wednesday, usually gold tends to find its bottom either on Tuesday or on a Wednesday. It's a U-shaped week, so the week begins with higher levels. We see a drop in oil at the beginning, gold at the beginning, and then a recovery afterwards. Okay, so that's more or less what we're looking at. It doesn't happen every week. If there is a figure coming out from the U.S. next week, we have inflation on Tuesday, and if it comes out weak, yeah, it could prove the theory. We could see bottoming out on Tuesday. If we have weak inflation, we'll see gold rising exactly as the theory goes, right? But if we have a strong inflation figure, then gold could find the low on Tuesday and go even lower afterwards. And on Wednesday we have the Fed, so weeks with so many events usually don't tend to follow these patterns. But quieter weeks, that's when we can begin identifying these seasonal or weekly patterns. If you look at hours, big moves happen around economic events. I'm not saying anything surprising. Gold is similar to currencies in that sense. So we have tension and very low volatility ahead of a significant release. Let's say US data comes out at 12:30 GMT. And then we have an explosion of volatility. This explosion of volatility can be regardless of the figure. I mean, we can have the figure coming out exactly as expected. Eventually, we'll see no shift in the big trend in gold, but we'll see lots of high volatility, lots of price action just after the release in the first minute and then in the first half hour or something like that. So it's another thing to take into account. Okay. And yeah, there's also lots of volatility around the openings. So in Tokyo, it's at midnight GMT. It's and in London, the stronger opening is at 7 GMT, and in New York, 12 GMT. So if you're trading in Europe, 7 GMT would be 8 in London or 9 here in the old continent. And 12 in New York, 12 GMT would be 8 a.m. in New York. Okay, now these times are summertime, which is most of the year because summertime is daylight savings time is between the end of March and the end of October. So that's around 7 months, but during the winter it's a bit shorter. Of course, I mean, sorry, it's 7 GMT. It becomes 8 GMT, which is still 8 in London, and it becomes 1 GMT in New York, which is still 8 in the morning in New York. Okay, but anyway, these are, you just have to look at when sessions open, and that's when you'll see more volatility, a bit before the open, a bit afterwards. Okay, that's the things I have covered for you. Yeah, you're most welcome. I hope you learned something new. I try to focus more on the long term. While I wait for questions, let me remind you once again that we have our premium service, and we have this major offer today, just $9.99. It's even less than $10. Do I sound markety enough? Anyway, I think it's an opportunity. It's really cheap. You have 1 month to test the service. You don't like it, just cancel it. I do believe you like it. I think if you're here, you want to learn new stuff. What we do, I think, perhaps the best advantage to try to sell you guys is that we accompany you during your trading day. So you get to ask us questions, to answer your doubts, to provide you with well, live coverage of specific events. So you're never trading alone. I know trading is a very solitary thing, so you're not trading alone. And well, again, the full price is higher, but you can try first month much cheaper. Okay. Yeah. But let's get back to your questions. Well, I don't see any questions at the moment. Gold has impact on the economy. No, I see it the other way around. I see the economy is having impact on gold. So the higher, I mean, the more there is inflation and central banks need to combat them, they raise rates. That's when yields rise, and that hurts gold. And when yields fall, it hurts gold. Can gold impact the economy? Not anymore, unless the economy is fully dependent of one country dependent on gold. Now, South Africa has lots of gold mines. It has other industries as well. But so there is some impact there from the price of gold on the wider economy. But in general, I don't see gold as impacting the economy, but the other way around. What do you mean U-shape? U-shape is that I'm talking about the hours of the week. So prices tend to be high on Monday, fall towards the middle of the week, and then rise again towards the end of the week. So that's a U-shape. That's the idea. Wednesday is the bottom of the week, if you want it. It's the middle of the week, middle of the trading week. Monday is the beginning, falling towards Tuesday. Wednesday is the bottom, and then it rises back on Thursday and Friday. Hope that answers the question. Does US debt ceiling affect gold? It did affect gold a bit. Thing is that everybody knew that politicians would eventually sort it out, would eventually find a solution. So, I mean, Republicans tried to get as many concessions as possible from Democrats. They got a bit, not everything they wanted, but nobody wanted to wreck the U.S. economy, because if the U.S. would have defaulted on its debt, that would cause. I mean, the safest thing is the world is not safe anymore. That would then what is safe? That would cause markets to freeze. Nobody wanted that. Nobody wanted politicians that want the U.S. not to honor its pledges. The U.S. tries to convey itself as portray itself as a well, trustworthy economy. So, thing is, we saw yields more short-term yields rising towards the deadline, and that pushed gold a bit lower. But long-term yields didn't move that much because investors were fully convinced that the U.S. politicians would resolve the issue. So, and that happened. Okay, so yeah, so I think it had a minor effect, and now the issue is settled until 2025, till the beginning of 2025. So we have a year and a half to forget about it. Another question: where can we track yields? You're referring to? So you can track them on TradingView. If you look for an asset called US10Y, US 10-year yields, or just Google US 10-year yields TradingView, then you'll find it. Okay, but many brokers also offer yields. I would also look at 2-year yields. They're also interesting. So that would be US 2Y on TradingView. But I think it would be easier just to, instead of trying to remember what I say, just Google US yields TradingView. Sorry. Additional questions? I think I was running a bit fast through the presentation, so. Thanks, I found them on TradingView. Okay, that's great. Where is gold heading? Well, I think there's lots of demand now for gold. So I think the general trend is bullish. We're seeing gold a bit sideways in recent weeks. I think it's still bullish because US inflation is falling, and I think the Federal Reserve will not raise rates next week, and they'll find it hard to restart raising rates in July, contrary to what they say right now. So once that is cleared, I think gold has more room to rise, and in the bigger picture, there's demand from China, and also from Russia at this point at least. So I see gold as, I mean, medium term bullish, short term sideways. Range gold goes down and then up. Yeah, that's range trading when it goes up and down in the same range. I don't have the chart right in front of me, but I would say that we're talking about the range would be 1,936 was the recent low, and the high 1,984. I mean, that's relatively limited range for gold. Okay, so that's the current range. In the bigger range, I mean, the big levels are 1885 on the downside. If we get a break to the downside, and to the upside, it's 2075, which is one of the biggest peaks over there. Which reason do you prefer trade gold daily? Which session? Well, I think the European session, and especially the overlap between the European and the US session, is when we have most volatility, okay, most liquidity. That is relevant for gold, that's relevant for stocks, that is relevant for currencies, of course, Forex. So when we have more liquidity, we have fewer spikes, we have fewer of these sudden falls, only come back, or the other way around. So that's a safer time. I mean, you have enough volatility, but with less crazy stuff. So I would say that the best hours are, the overlap between the US and European sessions, or the European morning. In general, the European session. Things are much slower in Asia. Well, I'm biased. I live here, so I'm asleep at night. So, yeah. So I'll throw my link to the premium service once again. As I mentioned, we have a good, a nice sale just for today. Take advantage of it before it goes away. First month, very, very cheap. If you like it, we'll be glad to have you staying with us long term. If you don't like it, not much to lose. When is the upcoming interest rate? Yeah, of course, every interest rate decision, especially in the US, affects gold. So the timetable now is we have inflation figures on Tuesday from the US, hugely important, more important than non-farm payrolls. We have the on Wednesday the Fed decision. Expectations are that they will not raise rates, mostly priced in, but they also published dot plot, their forecast for new interest rate hikes. I think it'll be relatively hawkish, and that could trigger some bounce in the US dollar, a fall for gold. But I think afterwards Powell will be relatively dovish and sending the gold back up. And then on Thursday we have the ECB, which also has an impact on gold. They will probably raise rates by 25 basis points. That could send the US dollar, that could send gold a bit down, but probably a short-term effect. Again, the ECB has limited impact on gold, the Fed much more. Okay, so the most important event is Wednesday, Fed decision. Again, we have Tuesday inflation in the US, Wednesday the Fed, and Thursday ECB. So it's important to rest over the weekend if you want to trade all these big events. Yeah. Any more questions? I think I have time for one more. I have another screen here with your questions. That's why I'm looking to the side. Well, I see no further questions, so that's my opportunity to say thank you very much for coming along. I hope you learned something new, something that will help you in your trading, short-term, medium-term, long-term. About gold, I know lots of you like gold, and that's yeah. And for those of you already on the premium service, you can I'll share the presentation with you, and those that aren't, again, we have a great offer, only $9.99, as Americans say. Yeah, so you're welcome, and well, I'm thankful again for you coming, and yeah, that's it for today. So thank you very much once again, and hope to see you soon on our premium service. Thank you, and bye-bye.